Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, August 26th. Today on the show, Meta has settled a landmark social media addiction case against them. We'll dive into the details of that settlement. We'll also preview Nvidia's quarterly results coming out later today with an analyst to get into how Inference is changing the story of the chip sector right now. We'll then talk about the pushback against AI data centers with the CEO of Emerald AI, which just announced a new funding round that puts it at unicorn status. We're bringing on our Microsoft reporter to talk about Bill Gates' new warning about AI. Our editor-in-chief is coming on to share some of her thoughts on AI M&A. And finally, we have some exclusive details about some more OpenAI departures and also about Hugging Face's financials. It's going to be a busy show, so let's get right on into it. Meta has settled a landmark social media addiction case against them. The company said it will pay up to $18 billion and implement new protections for teenagers and stronger controls for parents. Our San Francisco bureau chief, Jason Dean, has been following the case. He joins us now with some takeaways. Jason, welcome back to the show. It's great to have you here.
Good to be here. Thanks, Kush.
Is this the outcome that you expected, Jason?
I don't think so. I mean, it's you can never rule out a settlement in high stakes litigation, but I think it's fair to say this was a surprise.
Okay. And why settle? I mean, what was the alternative here? This would have gone on for many more months, I guess, and there
I,
would have been many more headlines about it.
I think, yeah, from Meta's point of view, there was quite a bit of risk here. I mean, the amounts that have been talked about, even if they are exaggerated, were enormous. I think Meta at one point put the total amount that the states were seeking at over $1 trillion. The state lawyers put it closer to 200 billion, but both of those numbers are far, far in excess of the number that they ended up at. And then you had just the reputational risk of the trial and the fact that Mark Zuckerberg and other senior executives were going to have to testify at this trial that began last week. And that was a trial involving a subset of 29 of the states that are involved in the broader lawsuit that was settled today. So that even wouldn't have been the end of it.
So, I mean, I'm trying to figure out, what the states, the people issuing the lawsuits would have wanted here aside from the money. You've been following it here. Meta did agree to certain changes on its platform. I mean, was that the big win here? Or because $18 billion is, it's a fraction compared to what they seem to have been seeking.
Yeah, I mean, it's a large amount for a settlement like this. Nothing to sneeze at, but yeah, for a company that had $60 billion in net profit last year, this isn't like an existential threat. I think the remedies are at least as important for those on the plaintiff side. And they include a number of measures: default daily limits, nighttime blocks for teenage users, enhanced age assurance measures to prevent children from getting around those blocks, and new tools for parents to help protect their children. So, clearly the state attorneys general involved here felt that those and other remedies involved beyond the money would help to address the numerous concerns they had about how Meta's platforms have been affecting kids.
And do you think that these measures will work?
It's too early to say. I mean, Meta has announced countless at this point um, uh, tools and changes that it says will help improve the welfare of its minor users. I'm not sure anybody who is a critic of the company is particularly persuaded that those have worked so far. We'll have to see, how these are implemented, how they're enforced. I think it's safe to say that probably this is not the end of the controversy.
Right, right. So there was an interesting part here of this morning's settlement announcement. Meta is calling on YouTube and TikTok to sort of join in this, um, push for more safe use of social media. So just remind us of the context here. These cases that were filed, it wasn't just against Meta, it was against all these platforms, and so we only have a settlement from Meta so far. Was that the context here?
Yeah, Meta is I think this is something else that they kinda got out of this settlement. They're committed to pay about 70% of that total, over a decade, in installments to the various states and territories that were party to the settlement. The remaining 30% is contingent on the states getting, TikTok and YouTube to agree to, A, make many of the same changes to their platforms that Meta has agreed to, and B, to pay an equivalent amount to that 30% for each of those 2 companies. So, you know, they're trying to do some jujitsu here, I think, where, they have been by far the biggest target of this sort of criticism, and they are now positioning themselves as the company that is calling on the industry to step up and make things better. So there's a benefit to them in terms of making a big portion of the settlement contingent on the actions of other companies and positioning them to sort of play a leadership role
Right.
um, in this area.
And do you think TikTok and YouTube and I mean, they didn't mention Snap, I guess, and if Snap was the other company, or do you think they all settle as well? Do they have track records of settling these types of disputes?
I think we'll have to see. I mean, they could face some of the same pressures that Meta was under, but neither of them has had the degree of scrutiny and pressure, the sheer number of lawsuits that Meta has been facing.
Right. I mean, let's just talk about this broadly, Jason. Like, if you think about Meta and its product focus right now with AI, that's certainly what investors are evaluating the company on right now. Its capex is extraordinary. They want to charge for these consumer products now at some point down the line. I mean, help us connect the dots here. How do you see these two as related? They're sort of on this paradigm shift, I guess, from being a social media company to an AI company. Does this settlement have any impact, do you think? Or were they thinking about the AI push as they decided to settle this?
I mean, I think this if the companies are wise, they will see this as a precedent for what could happen with AI. Many of the same issues of platform responsibility and potential harm to not just children but adults as well exist with these new AI, with AI chatbots and other AI products. Not just exist, but in some cases, arguably, are much more acute. And
I mean,
the industry
Bill Gates is saying as much this morning. He's the loudest this
absolutely
morning about it.
talking about the stunting of sort of emotional development of children from overuse of AI chatbots. So much hangs in the balance, and the companies have a choice of either trying to get ahead of that and do the right thing early, at potentially at the risk to growth, which is obviously the thing that Silicon Valley has been obsessed with for a
Right.
long time, or not, and kind of compete in a lowest common denominator way, as arguably has been done in social media, and then we end up with a similar set of lawsuits and regulatory actions, probably in the not distant future there. I
And
mean,
so
we already have some.
right, right. And so let's go back to what you started this conversation with is that you said that this likely will not be the end of the controversy, even though it's a settlement. So, are there still lawsuits hanging in the balance, or do some states still have them outstanding? Where will this story go as it relates to the social media addiction issue?
I mean, there are many more lawsuits from individuals, groups against Meta and other companies around this issue. This settlement covers 52 states and territories, including the District of Columbia. There was already a legal battle that Meta lost with the state of New Mexico. The state attorneys general and territorial attorneys general are largely covered by this, but there are many more lawsuits still to be fought. And I think that was also part of the incentive for Meta to, contain the risk with the settlement in this one.
Right. Great. Well, Jason, I want to thank you for coming on. That is Jason Dean, our San Francisco bureau chief, here at The Information. Nvidia reports its quarterly results tonight, and there is a lot to look out for. But as big an event as it is, the chip story has so much else to it right now with the memory crunch, inference chips, OpenAI developing its own chip. I want to bring on our partner, UBS, for a conversation about all this. Tim Arcuri is head of AI semiconductor research at UBS. Tim, welcome to the show. It's great to have you here.
Thank you.
Okay, so let's start with the news at hand here. Nvidia has got results tonight. What are you going to be looking for?
Well, I expect a very strong quarter. Backlog and demand signals are very strong. This year, our model implies they're going to ship 10 to 11 gigawatts. You saw from the deal that they have with SpaceX, they have basically 100% share there. SpaceX has said that they're going to add 6 gigawatts next year. That's a huge incremental number on what they're doing this year. So obviously, that speaks to how strong demand is. I think the multiple on the stock has gone down so much. And I don't think anything they can say really is going to change people's mind about the AI narrative. So to me, it's more about the numbers than about the narrative. I don't. I think people kind of have their mind made up about the financing and all the questions around that. So I'm not sure anything he can say about that's going to really change people's mind. It's more to just prove to people how strong his demand is and how big his revenue can be over the next few years.
Right. Well, I mean, let's talk about what he could say on the call. There's a lot to get to. There's certainly the open weight model push the company's making. There's the whole expert control issue. It'll be interesting to see if he addresses that, if at all. I mean, what I'm sort of looking for is a little more color on the inference play that they've made with Grok, and we had Nebius on yesterday to talk about their adoption of the Grok chip that NVIDIA has been working on. I wondered, as you think about inference broadly, have we seen inference show up in the financial results for these chip companies in a meaningful way? Is it all just commentary right now? I mean, we certainly have the companies that are specifically focused on only inference chips, but how are you seeing it show up in the financial results?
I mean, look, training is just the R&D phase. And we've trained all these models, and now all these models are now really, I mean, we're seeing massive increases in inference tokens, and inference equals revenue. And this is the real scaling of AI. So inference is what is driving revenue for all of these companies. It is what is driving revenue for the hyperscalers. It's what's driving revenue for the neoclouds. It's what's driving revenue for Nvidia. It's what's driving revenue for the memory companies. So inference is the story moving forward because that is the production of AI. It's like I always use the analogy, you go into the kitchen when you were a kid and you learn pretty quickly not to touch a hot stove. Well, that was your that was the training that basically made that rule in your brain. And then every time you walk into a room that has a hot stove, you create an inference token knowing not to touch that hot stove. So that's the value that gets created to you from the rule that you train. So like we have shifted now from creating these models to now inferencing tokens and generating revenue. And so that's become the big driver for all of these companies.
I mean, whereas some people might go into the results looking for specific numbers tied to sales of these inference-focused chips, you're sort of making the argument that it doesn't really matter if they tell us, how much of the Grok chip they sold, or even maybe what Cerebrus's results tell us about inference sales altogether. You're saying this is driving demand across their entire product stack right now.
Yeah, I mean, you're talking about is fast inference. So there are different parts of the market. So inference is what is driving everything. Fast inference is where the debate is. It's what is the threshold for people to pay more for tokens, and we're still sort of sussing all that out. It's like what are the markets that people will pay more for tokens? Coding is definitely one of those markets, and so that's the market where OpenAI went out and signed this deal with Cerebras, on hotly on the tails of that. Nvidia bought Grok. I think that Jensen very quickly saw that there was a pretty big market, and that deal, convinced him that there is a big market for fast inference. Now he's said different things at different times, whether it's 10% or you know, 20 percent of the market. it's still a big piece of the market, and so I think that's what you're talking about is the fast inference market. So yes, I
Right.
would like to hear something from him on how that market breaks down and how big the fast inference market truly is.
Yeah. We saw this week that OpenAI was making some noise about its inference focused chip, Jalapeno. Do you think that that is a threat at all to any of these inference focused chips or fast inference?
Uh, I mean, sure. Every single hyperscaler and also the large language model providers want to make their own chips, and in many cases, this is going to be to serve the fast inference market. So I think that the stratification of the inference market is still being worked out, and I don't think that anyone really knows how the market will bear paying what price for what inference token. So I think that there's just a rush to have a solution that can serve every conceivable part of the inference market out there.
Right. I want to ask you about the M&A landscape right now. So Grok certainly came in, as you said, to Nvidia by way of a licensing deal or sort of pseudo acquisition, you could say. AMD has made some big acquisitions. I mean, they're coming fast and furious. Um, is there are there particular pockets of M&A you think are going to be very active here from the big public semiconductor companies? What are they going to try to buy here?
Yeah, I mean, for the big companies like Nvidia and AMD, it's been mostly on the software modeling and the networking side. There's a lot of activities in areas of technologies to string GPUs together and racks together, stuff like advanced packaging, new chip architectures, and new networking and connectivity, technologies. I guess if I had to generalize, though, the M&A deals in semis, the bigger ones anyway, have really just been to build scale. It's really no different than what we typically see as markets evolve. I mean, if you just look at the size of the chip business, we're going to be a $1.7 trillion business this year, scaling to about the mid twos next year. So now a lot of that's memory, but even if you exclude memory, we're growing at 30% this year, if not more, and we're pushing a tr- you know tr- $1 trillion business soon. And so I think there's really a lot of opportunity for, and a lot of desire for these companies to build scale as the
Right.
market's gotten to be that large.
Right, and sorry, you said 1.7 1.7 billion, 2 billion. That was on which metric was that based on?
Oh, semiconductor revenue, the entire size of the semiconductor industry, semiconductor
Wow.
revenue will be $1.7 trillion this
Trillion.
year,
Okay, okay, yeah. Right,
scaling
right.
to
1.7 trillion.
$2.5 trillion next year.
Right,
So I'm
right.
just
That's
pointing out the size and the scale of the revenue opportunity. And if you're a company in this industry, what you want to do is you want to build scale to
yeah.
capture that massive revenue opportunity.
Right. So, on that note there on acquisitions then at looking at scale, I mean, is there any way you think that, they might try to address the acute issues of, for example, the memory chip supply chain crunch? I mean, is that something they could sort of address with acquisitions? Might they try to address some of these other bottlenecks down the line with acquisitions?
I think it's pretty hard. I mean, it's pretty hard to go out and buy a memory company. I don't think acquisition is the solution. I think what you're seeing is you're being forced to make trade-offs in your product roadmap to try to arrest some of these bottlenecks, and you're making trade-offs in terms of cost and performance to try to address the fact that memory is in such tight supply. And one thing you're seeing actually is rather than M&A, what they're doing is they're going out and they're signing these long-term agreements with for example, memory companies to basically commit to a certain volume over time, and they're committing to uh, pricing as well because everybody wants to have some control on their input cost on the memory side because it has become such a big part of their input costs.
Right. Well, Tim, there's a lot to watch for, and certainly a lot to watch for tonight. I want to thank you for coming on. That is Tim Arcuri, head of AI semiconductor research at UBS here on TI TV. Emerald AI raised $150 million at a valuation of $1.05 billion. The company is developing software that helps data center companies optimize its power use. It is backed by a number of big names, including Nvidia, Emerson Collective, Salesforce Ventures, and John Doerr of Kleiner Perkins. I want to bring on founder and CEO Varun Shivaram for a conversation. Varun, welcome back to the show. It's great to have you here.
Akash, thanks for having me.
Congrats on the funding round and notching the unicorn status. So, last we had you on, we were talking about your customers. You mentioned that Oracle was a big name that you were working with. That was quite a few months ago. Tell us about some more of the customers that you signed on for your product.
Well, look, we're just delighted to be on. Thanks for having me on. We're delighted that Emerald AI transforms AI data centers into flexible allies to the power grid, capable of reducing their power use when the grid is stressed while protecting the performance of these critical AI workloads. We've now demonstrated the technology in 5 different data centers around the world, and we've entered our commercial scaling phase. We're deployed at full data center multi-megawatt scale, and with Nvidia, we have the world's first power flexible AI factory or AI data center coming online this year with Digital Realty in Virginia, in Manassas later this year. So we're delighted that we count among our customers some of the world's leading AI firms, global data center platforms, as well as leading American power utilities and utilities around the world globally.
Right. So, I mean, I see some of these logos on your website. So, Nebius, who is, a frequent guest on this show, is that another company that you're working with their data centers?
We did a fantastic showcase of the technology with a Nebius AI factory or data center in London. Here's what we did. The National Grid, one of our investors in the utility in the United Kingdom, needed the data center to reduce its power consumption during the moment of peak grid stress. It just so happened, Akash, this moment of peak stress was at halftime of a soccer game. Everybody in England watches soccer. They turn on their tea kettles, and when the
Yeah.
tea kettles spike, launching a gigawatt of load onto the grid, that AI data center was able to flexibly reduce its
They
demand.
launched their tea kettles during halftime. That's I didn't know
And
that.
And at full time, they stop watching their TVs, they go into the kitchen, they turn on the tea kettles. So, as it so turns out, every jurisdiction is going to be different. Hot Phoenix day, all the air conditioners turn on. And that's when we made a Phoenix data center, an Oracle data center, reduce its power consumption. California, when all the solar goes down in the evening, there's a need for demand reduction on the grid to help us balance supply and demand. The point is, AI data centers can now be these flexible allies to the grid, and
Right.
Emerald's built the technology with NVIDIA to make that possible.
So, have you done any data collection then? I mean, you've done some work in Arizona, Illinois, Virginia, a number of states here in the U.S. Have you been able to collect any data on how much your software has saved maybe the local counties in terms of electricity costs or affordability? Because I mean, this is the heart of the issue, right? Well, it's a multi-layered issue, I should say. It's one facet of the issue here, the pushback against data centers.
Yeah.
Have you collected any data that suggests that it's bringing down costs for those counties?
Exactly, Akash. This is the heart of the issue. And so, I was proud that in the New York Times yesterday, we were profiled as this AI startup wants to reverse the backlash against AI data centers. There are 2 key problems that we solve. The first one is we make it possible to solve America's power crunch for AI, right? You can't fit enough data centers on our power grid today unless you have Emerald AI. With flexible data centers, we can unlock 100 gigawatts of power overnight, and we can fit more data centers onto the existing grid because they're flexible. And the second problem we solve is with Emerald AI, as you said, Akash, you're actually able to reduce power bills or restrain the rise of power bills because a
Right?
flexible data
How much? How much? By how much?
every time you increase the utilization of a local power system by 10%, you reduce bills by 3 to 4%. The point here is we have a big grid already in America. There's 100 gigawatts that isn't being used today. If you can better utilize the existing grid, an AI data center that joins that grid will reduce community bills.
Right.
That's how you help to solve the affordability crisis and the reliability crisis because data centers can be unpredictable users. By making them controllable, flexible users, you actually prevent blackouts. So communities should look at these AI data centers that are flexible with Emerald as potential good
Right.
citizens for the
Right.
community. And they, of course, benefit because they get faster access to power.
So you are talking day and night to these data center developers. As you look at the pushback against the data centers, which, as you said, is at the heart of the issue right now, what kind of regulation do you think should be implemented here in terms of data center development?
We need to recast the contract that AI and data centers have with power grids and with local communities. And that new contract is what Emerald AI and our software platform, the Emerald Conductor platform, operationalizes by making these data centers flexible. That new contract says, look, if you are a utility, you're a regulator, you're a governor, you should be inviting these flexible, good citizen data centers into your community. You should have lots of them. They drive economic development, they drive jobs, innovation, but they also, because they're flexible, they better use your existing system instead of forcing you to expensively upgrade it and raise everybody's costs.
Mm.
And they keep you safe, your energy secure and reliable. That's the compact. If a data center is willing to bend over backwards and be flexible, and our software ensures that the critical AI workloads continue to run at peak performance, right? We are orchestrating AI workloads with AI agents
Right.
within an AI data center in order to precisely control the power while keeping the AI performance acceptable for the customer. That's a compact that I think we can get behind because today's compact doesn't work.
Right.
Governors need a new option, a third option where they say, hey, come to my state, come to my utility, but make sure you're helping my community out.
Last question for you, Varun. You've done a lot of work in the U.S., also in London. You said, I'm sure you're focused globally. Is there a country that is doing this really well right now? I'm thinking about all the energy advancements happening in China. Are they sort of the leader here in terms of keeping electricity bills in check as they build out data centers, or where are you looking for, your own innovation advice, I guess?
The funny thing is China doesn't need this, right? China built 500 gigawatts or more of power generation last year, 10 times what America did. And between now and 2030, we'll have a 50 to 80 gigawatt gap in what we'd love to build for data centers and what the grid can actually plug in. That's why it's so important that overnight we unlock this 100 gigawatts that data center flexibility does. Now, you mentioned the global opportunity. Look, we're not just confined to the US. America and all of our allies need this in the race for AI innovation. That's why we're proud that in this Series A round, we've raised $150 million and we now count 12 Fortune 500 global companies on our cap
Right.
table, not just GE Vernova and Nvidia and Salesforce, but also Siemens in Europe and Samsung in Korea and several Japanese entities, a Turkish entity, et cetera, et cetera. We are going to take this technology, bring it global anywhere that you have a grid that can't plug in enough data centers quickly enough, and anywhere where rates are rising for customers. We're going to help to make AI a good grid citizen, keep rates affordable, and get way more data centers connected. You can have them all at the same time with flexible AI data centers.
Great. Well, Varun, I want to thank you for coming on. That is Varun Shivaram, founder and CEO of Emerald AI here on TITV.
Thanks for having me.
Bill Gates issued a warning today of the threat of AI. In a blog post, he wrote that AI will either be the greatest equalizer ever invented or the worst source of injustice. I want to bring on the Information's Microsoft reporter, Aaron Holmes, for more on this. Aaron, welcome back to the show. It's great to have you here.
Happy to be here, Akash.
Okay, so this is the co-founder of Microsoft saying that AI is going to cause some real pain. Did this surprise you coming from Bill Gates?
You know, it is somewhat interesting because this is kind of a pivot from where Bill Gates was on AI just a few years ago. We actually know in 2019, he was advising Microsoft executives that he didn't see the hype in OpenAI and he wasn't sure if it was worth investing in them. Then by 2023, he had come around and he was extremely optimistic about AI and, wrote an essay that year saying that AI was going to potentially, lead to abundance and solve world hunger and solve things like cancer. Today's essay or last night's essay is a lot more dire. And it's basically, this message of alarm saying that it appears we're not doing anything to rein in or prepare for AI. And Gates is basically warning that, if that continues, we're going to see potentially massive job losses and societal upheaval from what he sees as the disruption coming from AI.
Were there any benefits that he outlined in his essay from the technology?
Yeah, he still thinks that it could potentially, reshape industries like agriculture and allow us to grow food at much lower costs. Could potentially lead to, you know, a decrease in inequality if we're able to distribute the benefits of AI. So I think he is still kind of angling for this possible utopian view of what AI could bring. But in the short term, he seems to be worried that we are not really on track for any of those outcomes.
And did he say what people should be doing with or without the technology here to sort of prepare for this future?
Yeah, so the biggest thing that he's predicting is essentially that, AI, while it's had problems like hallucination so far, it's about to overcome them in his view and will be able to reliably do the vast majority of white collar jobs and also a lot of blue collar jobs with, robotics. And he essentially says that this is going to lead to a lot of jobs just going away forever. And that obviously would also lead to a huge loss in, income tax revenue. It would lead for people to have less income. So he thinks that first of all, governments should basically change the tax system and start taxing tokens, or how AI is processing, how much text AI is processing, as well as just taxing the way that companies use AI more broadly to try to redistribute some of that into a social safety net that could help people displaced by job losses. He also is calling for a lot of safety measures, to make AI less addictive and less potentially, uh, you know, sycophantic and habit forming, since he worries that especially young people could start to form relationships with AI instead of relationships with humans, and that could fray the fabric of society. So there's some broad steps that he is advocating for here, and essentially saying that all of the world's governments and company leaders need to start moving on those immediately.
Well, that's awfully encouraging for all of us using the technology. Um, Tell me, Aaron, I mean, these letters that these executives, former executives, high powered people issue, thought leadership, essays. I mean, Bill Gates is a prolific writer himself. Uh, do they have any impact? I mean, like, what do you think here? Like, is it all just, sounding the alarm here? Does it actually lead to any impact?
I think it's kind of interesting because we, in some ways, saw these tech executives, especially the people at AI companies, being the first to sound the alarm. And, at first, a lot of us kind of assumed that that was essentially marketing or a way to, hype up the importance of this technology that they were actively selling. But I think, we're now actually seeing the impacts of a broader backlash to AI with the regulations and protests that we're seeing against data centers and the way that that is starting to shape the midterm elections. So I think that, to be honest, like I'm not sure there's much that an open letter does to spur change, but I do think that we're starting to see this sentiment show up in a broader grassroots way across our country and also the world. And I think once that starts influencing elections, and it's pretty clear that that's already happening this year, we might actually start to see, some movement from regulators and from the companies themselves.
Right, right. I want to pivot quickly to talk about a story that you published this morning, which is, um, I guess you could say, related to some of the depressing elements of AI, which is that we're all going to get hacked more often, and we need cybersecurity companies to protect us. You wrote about Palo Alto Networks, which is at the center of that story, and specifically, you wrote about how much M&A they have been involved in. Why are they so hot on the M&A trail right now?
Yeah, so I mean, you're right. The one of the first impacts that we're seeing from advanced AI is that it's getting a lot easier and faster for hackers to carry out sophisticated cyber attacks. And basically, no company or even individual is theoretically safe from that, which is leading to this spike in spending on cybersecurity tools. And that's boosting Palo Alto Networks as well as other security firms. And specifically, Palo Alto Networks CEO Nikesh Arora has been trying to capitalize on that, new boom in demand to expand the products that he sells and basically like go beyond the office of the CISO into, the office of the CIO and the office of the CFO, and basically become more of a one-stop shop for all of the, back office enterprise software the companies need to buy. So pretty remarkably, we learned that Nikesh Arora has been considering some mega deals that would have been in the tens of billions of dollars potentially. We know that he looked at acquiring Datadog in the past year. He also looked at acquiring Okta. Those are two pretty massive publicly traded software firms. And
And
if
can you maybe, Aaron, for those of us who don't know the nuances of the subsectors of cybersecurity, so I mean, just give us like the 2-word summary of Palo Alto, what type of security they have made their name on, and then what subsector, I guess, Okta and Datadog play in.
Yeah, so Palo Alto Networks traditionally has sold firewalls, and more recently, kind of this broader category of endpoint security. Essentially, it's software that companies can use to make sure that they're tracking what's happening in their
Individual
IT
computers.
systems.
Right.
Um,
Right.
and also cloud applications and everything that kind of fits into the IT stack that companies use. Datadog does data observability, which is basically like a more specific type of software that lets you observe what's happening in all of your applications and collect data about it. Okta is an identity provider, which means it manages, logins, passwords, making sure people access what they're supposed to access. But the broader theme is that, Nikesh Arora wants Palo Alto Networks to be a platform, to be like one place that can handle all of these different IT related tasks. And the increasing urgency that a lot of companies are seeing to spend on cybersecurity is feeding into that.
Right. Tell me, as you looked at the theme here that I'm noticing is uh, certainly cybersecurity companies spreading their wings into other pockets, finding scale, I guess, as we've talked about on the show. Are there any uh, pockets of cybersecurity that are very ripe for acquisition right now, as you look at Palo Alto Networks or any other pockets of security?
Yeah, so definitely. I mean, one is this observability space. There's
Okay.
companies like ClickHouse that we just wrote about how their, ARR has been really dramatically rising recently due to this, AI boom. There's also areas like AI security specifically. So, software that is meant to make sure your AI agents are secure and aren't, susceptible to hacks. And we've seen Palo Alto Networks, but also a lot of other big cybersecurity firms doing a bunch of deals in that space in the past year, and I would expect to see more. And I think also, the identity space itself is very interesting because now companies need to figure out how to handle the identities of AI agents, or make sure that an AI agent in your system has a human connected to it who actually has the right credentials to be doing whatever that AI agent is doing. So those are all areas where we're hearing that there's potentially going to be a lot more deals in the year ahead.
Great. Well, Aaron, I want to thank you for coming on. That is Aaron Holmes, our Microsoft reporter here at The Information. Palo Alto Networks isn't the only deal maker in town. Deal making is heating up across the tech sector. We have some thoughts for you from our editor-in-chief, Jessica Lesson, who published a column on why companies are paying up for M&A right now in this moment and what it says about where Silicon Valley is headed. Here is Jessica.
My column this week is about what is going on in M&A. We are seeing a number of mega deals for startups that are really quite early in their existence, kind of the startups that usually would not be heading for the exit so soon. Obviously, the OpenRouter deal is the latest example, and Hugging Face is also in serious acquisition talks. So I was curious what's happening. Are the founders giving up and worried about their prospects, or have the big companies changed their tune? And I think I found that it was more the latter. Big tech companies are finally realizing that they have enormous revenue potential in using AI themselves. And they're starting to pay premiums that honestly are really shaking the founders loose. It was really interesting to talk to Kim Posnett at Goldman Sachs. She's the co-head of investment banking and really the woman in the room on most of these mega deals. And she says that that's really it, that big companies are willing to pay premiums now that they weren't before. It's reasonable. Capital is sort of cheaper than ever if you look at what's happening in the macro picture. Another factor I heard from people is that the Trump administration isn't standing in the way of these deals. So we're seeing this big M&A moment, but what's to come and will it continue? Some of the founders and investors I talked about said, wait to see a Lovable or a Vercel, one of these companies having mega exit. That would be a sign that there'd be a real change. Otherwise, many of them are still going to give it a go in the public markets. But all in all, what we're seeing is that AI is really a race for scale, and that's subtly shifted the waters in the last couple months and weeks here in Silicon Valley. Back to you, Akash.
The Information published some exclusive reporting Tuesday night about an executive shakeup between OpenAI and Salesforce. My colleague Laura Bratton, author of our Applied AI newsletter, has the details. Laura, welcome back to the show. It's great to have you here.
Good to be here.
Okay, so what's going on here? OpenAI people are leaving. Sounds like that's not news, right? Or is it?
Well, it seems to be a continued news story, but the thing that I reported on last night was that Peter Doolin, who is the former chief customer officer of Slack and had been at OpenAI for about 5 months, is going back to Salesforce.
And so this is the second OpenAI exec. So this is kind of interesting. We saw all these labs recruiting people from the enterprise software companies. Is this part of a bigger trend that they're going back to SaaS?
I don't know if we can call it a bigger trend just yet, but as you mentioned, this is the second in a week, a notable exit. I reported last week that Kalen Voss, who was a key enterprise sales leader at OpenAI under the former chief revenue officer, Denise Dresser, had also signed an offer letter from Salesforce. And both Doolin and Kalen Voss are going to be leading this new team within Salesforce that helps the SaaS company essentially use its recently acquired companies and sell AI products from those companies better. So they're going to be heading up that effort. And I think that it'll be valuable to helping Salesforce create value out of its recently acquired companies. I think in terms of OpenAI, this is just showing a shakeup within its enterprise sales team following the exit of Denise Dresser, and it's showing the fallout of that change of leadership.
What do we know? Have you heard anything about? Dali Rachik is the replacement for Denise Dresser at OpenAI. Do we know anything? Have you been hearing any chatter about how that team is coming together, whether it's looking similar or different to the Denise Dresser brief era of enterprise at OpenAI?
I haven't necessarily heard what the new team is going to look like, but what I have heard is that there's a continued potential emptying out of the enterprise sales team that's in place at OpenAI right now. I heard from my sources that there are a lot of people within the team that are looking to leave OpenAI because they're really upset about Dresser's exit. I also heard that across OpenAI, there's about 22 former Salesforce employees that are working at OpenAI right now that are in active conversations with Salesforce to potentially return to that company, which I think is a really interesting signal. We've been hearing this market narrative about how software is dead and OpenAI and Anthropic are going to replace traditional SaaS, or companies are going to build their own SaaS with OpenAI and Anthropic's models. And now we're seeing that the people that work at one of those very startups is actually going back to one of those supposedly dead companies. So I think it's kind of interesting. I don't know if we can call this a broader trend just yet necessarily, but it is very interesting.
Yeah, I mean, and look, we should say, I mean, this is happening across ServiceNow is another company that we've covered closely, and a number of their senior executives have gone to both of these labs. And so I'm sort of wondering, is that another company that starts to see people come back? It's certainly something to watch for. I want to ask you about another story that we are covering this week. So Hugging Face, you published some exclusive financial figures about that company. Remind us a bit of the context around the acquisition talks around this business, what the business actually does, and then what you found their top line is trending towards right now.
Right. So Hugging Face has a repository of open source models, and has become sort of key in this conversation about companies looking to use open source models, and have sort of their own infrastructure, because Hugging Face also offers compute and storage products. So, if you want access to GPUs and computing power to train and run your own AI models or build your own AI apps, Hugging Face doesn't necessarily own that infrastructure, but it rents it and resells it. Um, so I heard that because those compute and storage products are in higher demand and there's rising popularity of open source models, that really prompted this increase that I found, in which Hugging Face's revenue jumped 50% in just 2 months to 150 million. So that's between the end of June and the end of August.
Okay, and now there are reports that the company could be acquired.
Right. Yes. And that is the next thing I wanted to get to, which is that Hugging Face is close to a deal to sell itself. I reported with Steph. And, Business Insider had reported that the sale price would be about 13 billion, which would be a huge multiple, even higher than the acquisition of OpenRouter by Stripe. And I think that it just shows that there's this rising demand for the middle layer, this sort of middleman between developers of AI and the models themselves.
Right. And it is kind of interesting, the like you said, it's the open source, open weight model repository. I mean, this very much the high price speaks to the conviction that companies have that that will be the future. Do we know anything about about who might be in talks to buy Hugging Face, or do you have any predictions who it might be?
There's been a lot of names thrown around. Names that have been reported by other outlets include Salesforce, Nvidia, Microsoft, Amazon, any of the hyperscalers. So I think it could theoretically be any of those. And we'll just have to wait and see what the case is. My sources have been very tight-lipped. And I
But
will.
when you find out, come back and tell us who's making the purchase, because
As
I
soon
do
as I
agree.
find out, I will be calling TITB.
You can open the show that day. How about that?
Can't wait.
Okay. All right. Well, thank you for coming on, Laura. We very much appreciate that. Is Laura Bratton, our author of our Applied AI newsletter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I'm already excited for our next show tomorrow. Have a great rest of your Wednesday. Bye-bye for now.